Okay, welcome back to the lecture series. We are back and we are rolling. I did have a previous section before this, but I accidentally clicked the stop recording button. So this will be the official beginning of the lecture anyways. I am back here because I want to test out whether every macro is tradable below and broken without. Yeah, this is outside of macro. So we look at this replay into inversion and possible extension rate for the standard deviation, a range of equal lows. Oh, that's perfect equal lows, I think. And then there's here, let's see where 1050 was. Here's 1051. Uh, yeah, we have this inversion here. This is where 1051 is working from. So really, we'll be looking at something like this here, and then taking out the -2 with these equal lows. Yeah, so the Asian session is quite tradable if you know what you're doing. It was a revisit here into this breaker. So I would have my stops here, looking to take out these Asian range lows. Do these lows fit into the negative 2.5? No, they just scrape it by. I would not. I would much rather rely on here. Let's see if we can get something on the 1 minute, seeing that we are already quite late in terms of PA. Yeah, that's 1:1. Let's consider that price just went off of that conversion. Yeah, that would have been TP. Great. See what I was saying? So if we took price from the inversion point right there, that would have been the outcome, right? Entering off the inversion with stop loss at the height of the inversion candle, or if you do just PA quite well, then you would get this. But this is only foreseeable. Like you can only see this stop loss after this is broken down, but the inversion's already been visited. So we would still be practicing having our stops up here, aiming for those equal lows. This is a really good setup. If you're still, as we can see, we're still within the times of the macro, then there's obviously another setup that would form, but those are equal lows. All right, so it's a take on liquidity, an inversion. We get a retest. I would wait for the retest. That inversion right there. Maybe we would look to rebalance some type of range. Usually 50% that gets rebalanced, but then you also do want to pay attention to overall bias. Overall bias is very important. Are we part bullish? Are we part bearish? That is something very important to note. For the most part, we have stop wars. There is a fair value gap, a 5-minute fair value gap. So targeting internal range liquidity is not all that bad. Let's see what we get. I don't understand why my device is running so slowly. Okay. And that's up. So overall bias still plays a very, very key role. All right. You don't want to be taking out every point of liquidity. Hold on. So the price is still maintaining bearish price action. That is why looking to rebalance is not entirely favorable. You much rather want to be on one side of the market and the next thing we want to see, because remember that the main objective of this is to test the way that every macro can be traded. So what happens is we get a displacement out, displacement in terms of an hourly candle. This is what we're looking at. So obviously the range low of what do we call a session New York PM was taken. Just get these drawings. Range low of PM was taken and price displaced back into the range. In terms of order flow, we are still majorly, I wouldn't say majorly bearish, eh? Because we do come and take out these levels. There's a good reaction off of them. We do take out this level without having taken out any significant high. So I'd say we have resting low range liquidity. I mean low resistance liquidity. Oh, yeah. So maybe price working its way back up is not too bad. 950 is about to ring. We've already got close above that level. In terms of here, we've already had PA established this breaker, this inversion, and work within it. And break of structure, predicting the lows. I want to see break of structure above that to really be convinced of having longs. See, we have a take where we don't have a confident close. here's the price action that we get. This is failing to take. Now we need to make sure it aligns with everything else, right? In terms of higher time frame, we are within a bearish value gap. We have closed above the 50%, not by much. This place out, this place back in. Then we are greeted by this structural shift. Is there any low hanging fruit to aim for? Let's have a look. Not that I can think of. Oh. I know on the lower time frame this would have been a clean sweep. It takes out local levels, but then the most closest point of liquidity would be here. So it does not offer much range. It does not offer much range at all. This overall is not something I would take. Let's see that it's very, very indecisive market. Indecisive market, I mean. Hopefully silver didn't produce some kind of SMT because that would mislead a lot of people. But for the most part, as you can see, bullish price action was respected despite the choppiness of it being respected. Let's see what the next macro ends. The next macro is quite odd. 35, 40, 45. That's the 15-minute candle closing. Close over majority, eh? Close over that version. That we get a market structure shift over here. Alright, just after that take. The 2 to 2.5 is to take out this low, current session low. In terms of liquidity, yes, liquidity was taken. Internally, I mean, after internally, we got this market structure shift that now produces a negative 2 to 2.5 of about here. We have two. If we really want to be ambitious, then we can push for that, but then you push your trading stocks. So that will look something like this. Good. Stops looking like that. You would have this level. So we'll be obviously aiming here, but as soon as price reaches this level, drawing stops. Right, drawing stops right about here. And then it takes out. You see that? That's kind of how you want to work. You want to work, especially with prop firms. If you have a level, it's already giving decent RR. Like this RR is good enough. This RR gives you, if I'm risking 500, it gives me 750. Like it's close to a third of what I need to obtain to pass the prop firm, right? So it's already good money, right? So then draw your stops at like a good amount of profit or break even, right? If you don't want your daily P&L to fluctuate so that your drawdown doesn't get increased by that small margin, then bring it to break even, and then let the rest of price action do the work. Like that is really good. I think also structurally we did well because there was this 1 minute low here. We moved our stops just here, so structurally it was good. We didn't expect it to get revisited. In terms of that low, I didn't expect it to get taken, right? In terms of the 5 minute, there's only a low here. In terms of the 15 minute, there is no low. Probably just that candle low, but remember within every candle, as you saw within that 15-minute candle, on the 3 minute, there is actually a level there. So to an extent, we were just being ambitious, but it paid off. And then it goes off to the -4 deviation at the end of the day, but not, of course, without retracing. So obviously, the -4, the closest level before the -4 is now this low here, giving you 1:4 R, which is great, which is absolutely great. Overall, that proves that the Asian session is a tradable session, as well as the idea of trading practically every macro. We're not done yet. We're not done yet. We're actually going to visit the next macro and see what that has to offer. Right? The point of this, what do I call these things again? Lecture, yeah, is to observe whether every macro can be traded. Right? As we can see, with a large amount of, I think we've called about 3 trades now, like nearly every macro can be taken. We've got an hourly break structure here. This gap has already been visited by this candle, so where we're going is quite difficult. And with these macros, one thing I realized is that you want to be looking at 15-minute ranges. They are the best in terms of offering direction. We've got this 15-minute fair value gap that was taken. It obviously came to this level. I don't know to do what. There does seem to be a small volume imbalance here. Maybe that's what price came to visit. We have that market structure shift right there. A revisit of that market structure shift into that gap, and then break the structure downwards. So this is normally an intermediate term high according to ICT. So it's a level we don't want to see get taken. So usually if a level, we don't expect the level to get taken, there is a good amount of resting liquidity because that's what people put their stops, right, at levels that you don't want to see taken. So it would be reasonable to assume that there would be stops there. We've got this sharp displacement outside of this range and back inside. The reason why I'm looking at it is because in terms of the 15 minutes, you've got something going on here. All right, so boom, boom, boom. We do have a break, but then we have a into the 5, a retracement. No, I did say I'm quitting using standard deviation, so that's why I hesitated over there. Not standard deviation, I mean rebalance, 50% rebalance of the range. It can be deceiving, especially if you're looking at sessions. Very, very deceiving. So I choose to stay out of them for the most part. In terms of the 5 minute, all of these levels here were taken. We do have bearish price action, mind you, and I said that that is an intermediate term high, so we do not want to see. We're not really interested in seeing price take that. But let's see what price has to print in terms of price action. We've got this inversion now, and we'd be available for shorting. Stops here. Let's not be too ambitious. I mean, here's already a good range, taking out this low. So we'll aim here with stop losses to break even after this point here. It's putting our stop. Okay, and it prints. And unfortunately, this is the result of a working model. Right? Some days you're gonna get taken out, and some days you won't. Right? And it goes all the way to complete the rest of the range. So proof is you can trade every macro. We have, I mean, this is undeniable proof of that. You can trade every macro. Like I just came from trading Asian range, one of the worst ranges. Right? In terms of this trade in particular, I was gonna show you guys something, but I feel like it's way too far to grab. I've seen others in terms of inversions not have their stops at the inversion candles high. They rather have it on the high or low of the three candle range. So some people, I've seen T trades do this, which is a very interesting way of marking it. Right. The only thing is that now, in terms of TP, RR is this, and you would have to be very ambitious when aiming. Right. Like look at where the -2 is. Right. I'd either have to guess that this is going to have a market structure shift below and be able to project it up in time. And number two, there are no relative levels. So I'd have to rely on actual structural levels such as this low or this low over here. I wouldn't be too ambitious aiming for something I can't see. I need something to be structurally there. So in terms of that, yes, that can work. So yeah, this is quite an interesting what do you call that? An interesting trade. I've seen a lot of people use this. I'm quite eager to use this. This is like the ICT background, call it that. And then they have the candles like dark green. The dark green, it's like it's a certain type of green, man. It's like a really darkish green. And you just lighten it up. You just do what we always do. It's easier on the eyes. You know what I mean? And then yeah, that's pretty much it. Now we look more ICT. So we know that this works. Again, this is the result of a working model. Yes, we got taken out over here. Most unfortunate. I wouldn't. It's complicated. I would want to get used to having a much more respectable stop, especially when we have cases like these where it's really close. So we'd have to let's be safer, right? Let's establish that we will now place it on the candle opening of the third candle of the inversion. This is obviously to protect our position, right? We don't want to be taking unnecessary trades, right? If we look at the stop, it's still respectable. Remember, okay, we did want to aim here first, but that would give us a terrible RR. So in that case, we would have to rely on the standard deviation a lot, right? So we would have to project it out in hindsight because, right, the nature of trading inversions is that an inversion appears before marks such a shift. So it's very difficult to actually establish that you would use the standard deviation leg due to the nature of how an inversion candle works, right? Maybe another thing that you would add is the change in state of delivery, right? That would be a better indicator that the structure is shifted. So maybe um, if this is too low, we wait for inversion to interact, change in state of delivery, and then we can talk the change in state of delivery. That would look whoops. That would look something much rather like this. But remember, I'm not someone who trades change in state of delivery, so that would be very complicated, right? So when we look at something like this is already offering way less RR than something like that. Whereas if we enter off the inversion, our stops at that level, we get more R out of this position, and then more R out of that position. Alright, so it's all about preference, but I like to be engaged as early as possible and out as early as possible. I really love to interact with the what do you call it, up time frame. The 30-second, but I think having a good mastery of the 1 minute is way more important because obviously if in hindsight we look at this, we've got 1050, this inversion is fully closed and interacted with. Then we get an interaction one more time, right? After getting the interaction one more time here, this would work much better actually. Because it's much earlier, the nature of the inversion is quite natural, right? Offering a tighter stop and an early exit for that matter. Right? We can exit here, or we can exit here. Right? So that's the thing with time frames. The shorter your time frame is, the more you can get out of the market, but the the quicker you want to get out as well. Like when I engage in the 1 minute, I really want to be quickly in, quickly out, because I know that holding too long cost you, will cost you, absolutely will cost you. This is a good position, right? This is a very good position, very, very good position. Looking at that, you could enter here, right on the 1 minute, after this market structure shift here, into that gap, looking for the -2 to 2.5. That is when we're grabbing this low, right? That is when we can finally grab this low. If we're looking at the 1 minute PA, and then grabbing this low would make a lot of sense. Seeing that we get a -2, I mean the 2.5, or grabbing that low would make more sense. But on a general scale, I prefer being on this time frame. Maybe I deserve the 1 minute time frame for futures, both futures, gold, and what is the other one? The Nasdaq. Mainly because of the fact that they would offer cleaner PA. Okay. Let us continue. Let us continue the lecture. This is quite an interesting discovery, especially given since I was sleeping on the idea, right? Yet I also come to think that the most probable pair to trade during Asia session is gold, right? These other pairs are not exactly favorable for trading gold. I mean, for trading Asia session. Let's look at another pair. I mean, not another pair, but another run. That's 45. We look at hourly price action, and we've closed below here. We've also got a fair value gap. Right to the left, there's little to no price action. I wouldn't even consider this. This is too far left, bro. Too far to the left. I would just rely on what is in front of me in terms of the 15 minutes of, when I say displacement in, displacement out. Yeah, we did. We said that the last time. It fails to close, and then it closes. So we have this inversion, and we have this breaker structure. All right. I'd love to check the 1 minute, see if I can find anything. This inversion was closed above. You see the price, after it was closed above, price didn't come to revisit this low, right? The low of the candle, the inversion candle. That's the reason why I tell you, right, that it's very unlikely that price will always have that case that we saw in the last time where it took me out. Sometimes it's because of the fact that you see here we have two PDRs. We have the inversion and we have the breaker, right? I was saying sometimes that's just the result of a working model, right? The fact that price can take you out is totally natural if your model works, right? It's the effects of a working model. There is no defense or explanation for it, right? That's as much as I can say. Right, to the -2 to 2.5, we do have these equal levels here, but I wouldn't be too ambitious, seeing that we have this fair value gap here above us. So at over here, I'll be looking to trace my stops to break even. So let's see. This limit order, run in, we're already up. Other levels clean, yes, the levels are clean. Move those stops to break even. Let's see where price wants to go from here. I would move these stops over here just to predict and come up with a bit of a win. And whoa, that's cheating. That is cheating. That is cheating. Right? I think That is clearly cheating, bro. That is clearly cheating. I Let me move this level here. All right, because the thing is, it already interacted with the fair value gap. I wouldn't expect it to make another turn, and I wouldn't want to also come out as a loser. Oh, okay. Well then, well then, that's the position. Overall, we do have that breaker also. So boom, it interacts that breaker right there, and it's already 250, right? Which is obviously now New York. I mean, not New York. What's the session called? London. We see a respectable close in terms of the 15 minute. The 5 minute did break right through. Uh, okay, 55. On the 3 minute, we do have a rejection. We have this breaker block that is cooking. I mean, it's not cooking yet. It's not even a breaker. It's a fair value gap. Excuse me. Right. Okay. We have this failed take here. Failed to take this high. Inversion born. Structural shift born as well. I want to see what it's like on the 5 and 15 minute. The 15 minute is a large rejection of that breaker. The 5 minute is a large displacement out and back in. 3 minute, this price action is looking quite favorable. In that case, looking at the 1 minute, yep, yeah, that is it's as good as it gets. I don't know what other price action you'd want. We got here, right? Obviously, there's now this gap over here, so this inversion over here. These are barriers that could contribute to halting price from taking that walk. But in terms of the 5 minutes, there's only this and this fair value gap acting here. So I really want to see these lows get taken. Um, I would really be tight sit on that. Let's see what price has to offer on this macro. Oh no. Now, when you see me backtest this, please don't take this and start applying it on the market right away. It's best you do backtest it as well. As you can see, price was taken, meaning that the bullish run is still still quite strong. There we go. All right. So the bullish run is quite strong, and yeah, it's evidently still quite strong. Let's see how the candle closes. Yeah, looking at the 50% of the fair value gap. While it did respect the 50%, it would look bearish in hindsight. I mean, in foresight, it would look bearish if we had to consider like the fact that this low was taken, all these other weird and wonderful things. Maybe we would have had a different opinion, right? Looking at the daily, seeing that daily low was taken. It's probably like a weekly low as well. No, it's not a weekly low, it's just on the daily. So that would have maybe drastically changed our opinion, right? But since we're looking at the macro, we're really scalping, right? We're really scalping and we're really trying to just get in and out for the market. There we got in there, we got taken out there. Right? So it's a change of change. Right? We now know that we're bullish, right? Part-time bullish for the moment. Right, 45. We are somewhat near closing out that gap. Really nothing to return to on the lower. Price would just be, and this is also one of the greater things of life. As you can see, we've got that -2 deviation, right? So we can see that price is still forcing its way to get up there, right? Still forcing its way to get up there. Let's see if our 5-minute price action can follow the same bias. So let me rule out these lines so we are much clearer on where we stand. Right, break of structure. All right, break of structure. The break of structure is here. Fair value gap was impacted here. Now, obviously, fair value gap was impacted here. Break of structure that is being countlessly revisited here. it's also fighting between this level here. So we really want to see some form of like break or such at the upside. Okay, a lot of downside price action, especially these lows that are being, these highs that are being printed here. But then obviously that prints now the market starts to shift, revisit, prints another break. This is a very very complicated part of it. Right, we really have to pay attention to this gap and what it's currently doing to the market. Would price be looking to price lower? Very complicated, right? Very complicated consolidation type market. In my opinion, given that we have a lot of opportunity that you can engage every macro, it would be much wiser to avoid. If you can see that it's not printing clearly, just wait, right? The next macro is what? 40 minutes away, right? 40 minutes away, and you have yourself another macro. It's really no point in trying to figure out what's going on here, right? Let's see what the next macro is going to print. 44, 45, equal highs, gets taken. I really, really am looking forward to seeing something downward print, right? Be it taken here. I want to see some downhill printing, bro. We've reached -2 deviation. We've taken out some good levels. Again, another market that's moving sideways, but now it starts printing lower only when we are no longer interested. Now it's bull again, right? Engages the 15-minute fair value gap. That's a key concept right there. We closed above that. We also unfortunately closed above that. So yes, not getting stuck in the lower time frame and referring to the higher time frame constantly is also very important, especially when you're scalping. You really want to have an eye out for what we're currently doing. So we're moving out of this 15-minute value gap, and then now we've got a successful close above here. So I'd be looking at taking longs and obviously stops here and taking out these what seem to be like relative equal highs. And price action performances run without us. That is the beauty of markets. I've seen other traders that do something like this. When they see the momentum close above, they just enter off the candle, which is it's very scary for me. I generally do not advise it, right? Because I would much rather wait for a better entry than to just enter in the middle of nowhere. Right? Here's also good. Here's a good entry, given that these are breakaway gaps. You could have also just done something like that. And because this is a breakaway, you could put it over here. But then you wouldn't know where to aim unless you're using a standard deviation, of course. Then you would print something like that, -2 to 2.5, and you'd be looking to take up this high here. And in that case, you at least have something. Boom. So that's pretty much it, right? I think this lecture is already like 30 minutes long. Let's look at the analytics and then call it a day. 40% win rate, 2 for 3. I'm gonna keep backtesting this, and I'll probably send like the final percentage results. The benefit is that we only went down by 1%, which is at the beginning, before escalating by another $900. It's another like maybe 2%. Yes, like another 2%. If we're on 1.5, we did make a 3% change after that 1% drawdown. So overall 2% increase over the course of one day. 2% increase over the course of one day is quite interesting. Total losers is 3, maximum consecutive losses is 1, right? So that's good.